This is Jonathan from rbormetals.com. That's rbormetals.com. Okay, just a quick note before we kick off here. We want to let everyone know that we have 100-ounce silver bars. They're $9.99 fine from OPM, which is Ohio Precious Metals. It's a refinery in southern Ohio. It's been around for about 30 years, and they make quality bars. Just wanted to talk a little bit about why someone should invest in silver, and there's 4 pretty big reasons why. We're just going to cover them briefly here in this video. But one would be inflation, another would be industrial supply-demand dynamics with silver, the paper securities, the derivatives market, and this artificially depressed silver prices. So inflation is a really important concept, and most people don't get this. We didn't really get this until recently, and it's intentionally meant to be confusing and misunderstood. But essentially, inflation is it's a simple concept. It just means that more dollars or currency is in the currency supply than there was the year before. The result or the symptom of inflation is an increase in prices, an increase in consumer goods, and that's where the everyday person would really see the effects of inflation. But inflation occurs all the time, and right now it's running about 12 to 15% annually. That means the Fed's printing more dollars, creating money out of nothing and it's going to increase because of this massive amount of money that they've committed for the bailout. Now, the last mark we read about, Bloomberg News, maybe 2 weeks ago, was 8.1 trillion, which is inevitably going to be more and more dollars because more of these entitlements are going to need to be bailed out, and there's this whole automotive industry issue going on right now. So all these dollars are just printed into existence with no backing. Really, it's U.S. government debt, but so, the Saudis, the Chinese government, Iran, and numerous smart money investors are moving into precious metals because of the devaluing U.S. dollar, which is essentially what that means. If more dollars are in existence, the purchasing power of the dollar goes down. And traditionally, gold and silver have been the best ways to preserve capital. And gold has been considered the ultimate hedge against inflation and devaluing fiat currency, but many personal experts, metal experts, are looking at a core physical position in silver instead of gold because the fundamentals of silver look to outperform gold. One notable is Jim Rogers, and if you're not sure who he is, you can Google him, Jim Rogers, very well-known commodities investor. Now, another thing that a lot of people are asking are looking at the difference between silver and gold. And both, in general, precious metals experts agree that both silver and gold will skyrocket over the next few years. But how will silver perform in relationship to gold? Historically, silver has outperformed gold, and two sort of runs we want to look at are from 1970 to 1980, which was the last massive bull market for the precious metals, and gold went from a low of 34.95 per ounce to a high of 875 per ounce, which is increasing in value about 2,500%. Over that same term, silver went from 128 an ounce to 50.36 per ounce, which is about 3,900% increase. So that's pretty substantial over gold. Another term we want to look at is from 2001 to 2007. Gold increased about 329% and silver about 382%. We're measuring this against the US dollar. Silver is leveraged to the price of gold. So generally when gold goes down, silver goes down, but when gold goes up, silver goes even higher. Jim Rogers is backing silver over gold for inflation. Robert Kiyosaki's Rich Dad advisor, Mike Maloney, recommends, I think I read in his book, 70 to 30 ratio of silver versus gold. He's really bullish on silver. And the CPM group published data that showed in the 1990s the total known world stockpiles of gold and silver bullion were roughly equal to 2 billion ounces. This is really interesting. So they were roughly equal, the stockpiles in the 1990s, and in 2007 they published that the gold inventory increased by a few million ounces, and the silver inventory was depleted to less than 250 million ounces. So it dropped from 2 billion ounces to less than 250 million ounces, which means that gold is more abundant than silver above ground. Anyways, so here's a quote from Mike Maloney that we have: as the dollar continues to collapse, big investors will first turn to gold and dramatically drive up its price. By the time the public catches on, gold will look pretty expensive to them. Everybody will then start hearing about silver being rarer than gold, and in a frenzy, people will dive into silver just as stockpiles are practically diminished and production has stopped. That's when the silver prices are going to explode. That's from his fantastic book, Guide to Investing in Gold and Silver, which we highly recommend. We've got 100-ounce silver OPM bars. They're $9.99 fine silver bars. They're all weighed out exactly 100 troy ounces, and they're available for immediate delivery. We have them in our vault right now. So if you order, you get them right away. There's no delay like most of these other big bullion dealers that will make you wait 3 to 4 weeks before you get your product. We ship immediately, and we've got some of the best prices out there, much better than your local coin shop.